Hey everyone, today what we're going to be talking about is 5 amazing stocks that you can get today that will pay you a monthly dividend. Some of these are actually quite high dividends, and they are in sectors that are kind of interesting right now with the whole rebuilding of the economy. So let's get down and let's check these out. So the first one that we are looking at is Northwest Healthcare Properties Real Estate Investment Trust, NWH-UN.TO for the ticker symbol. So what are we looking at here? Well, of course, it is essentially a REIT, but it pays a 5.8% dividend, and the volume is actually pretty good as well. Now, this one does basically hold healthcare properties, which are going to be in demand, especially with more and more government money being thrown at this issue that we currently find ourselves in. The 5-year chart on this is actually quite interesting as well. It's gone from $10 a share to just under $14 a share. That's a 40% increase over 5 years. And oh boy, could it have been an absolute steal of a deal if we could have grabbed it at $8 only a few years ago because of the virus. Isn't it funny how a healthcare real estate investment trust went down during a pandemic? That just confuses me a whole ton. That's just because everyone was selling and not really thinking about anything. Whenever you see stocks that are going down in a so-called recession and they actually should be making a killing during that recession, that just means that there's some stupid big investment bankers who are saying sell, and really you should be buying. Now, this one does pay a 6.7 cent dividend every single month, and that really hasn't been raised all that much at all, really, but then again, we're dealing with still the so-called pandemic that apparently we are still in to this day. However, as I was mentioning, you would expect there to be a lot of money getting thrown at these businesses, and of course there is. Look at the revenue, look at the earnings. They are through the roof versus the past 3 years prior. This right here is what I would have predicted if I even talked about this stock back then, which I didn't. Next is Pizza Pizza. Now, Pizza is a fantastic company. I personally prefer Domino's Pizza or even Little Caesars, but everyone is different. Pizza is a Canadian thing. PZA, basically, it takes royalties from the franchisee owners, and this pays a 6% dividend at the time of making this video, and its average volume is 54,000 shares per day. Now, why is this actually a good pick right now? Now, when we are taking a step back and not looking at the actual numbers and as a business as a whole, how well are Pizza places doing right now? They do takeout, and they've been doing takeout forever because it's a pizza place. So the pandemic would have probably never hit them at all unless they were in areas where, of course, there's a lot of work versus homes. But the places that have homes are probably doing extremely well. The only issue I have with Pizza is their app is crap versus Domino's, and I prefer ordering pizza from an app. I don't know why. But either way, this is a very strong company. It's set up for pandemic era type stuff anyways because they already do takeout. So in my opinion, that is another stock that should have just never went down. And you can't deny a 6% dividend right now. And as we can see, it did go down during the pandemic, and it hit a low of just over $6 and something per share. Now it's up to 12. However, the larger issue is the fact that, of course, since 2017, the stock has been going down. It's doing better now than it was in 2019. However, while you are getting a 6% dividend, this is a fantastic company because it is set up really well for the future. However, at the same time, I really would prefer to get Domino's stock because it still pays a dividend. It's American though, and Domino's has a killer of an app. I order too much pizza from Domino's, and for the players who may be watching this video from the basketball team that I coach, that's how I ordered our pizza for our pizza party. Anyways, well, at least mostly I went to the store, but with the app I get free pizza myself, so all those pizzas got me a free one. And of course they do pay a dividend, which they have recently increased from 5.5 cents, which they increased from before from 5 cents. So it's a pretty strong dividend. The only issue is they lowered it during the pandemic. So while it's increased since the pandemic has been going on, it's also still lower than pre-pandemic. Also, something that is kind of interesting to me is the fact that their revenue was down during the time where everyone was ordering in food anyways. So that is kind of concerning to me. There needs to be something that needs to change with this business. And I'm going to say right now, they need to get an app that works better somehow than the Domino's app. Next is Boston Pizza, which 100% got hit by the pandemic. I'm not going to lie. They sure have pizza in their name, but when it comes to actually ordering, same idea. Like if you're going there for a dinner, it's different. I personally despise Boston Pizza as a business because of what one of their stores did with me. And I might as well share that here. They asked me if I would like to have cheese on a cheeseburger. I literally ordered a cheeseburger and she said, "Would you like cheese on it?" And I said, "It's a cheeseburger. Isn't there already cheese?" And she said, "Well, I wanted to ask." I thought that was smart because maybe I was an idiot and I just didn't maybe comprehend the fact that a cheeseburger has cheese. So I was like, sure, one of us is an idiot. Give me cheese. And basically I turned around and looked at my bill and said, "Why is there a $5 charge for cheese for a cheeseburger?" And she responded with, "Well, it doesn't come with a cheeseburger." And I lost my shit that day. I literally lost my shit. And I feel sorry for my girlfriend who was with me that day because I lost my shit. I don't usually lose my shit, but I lost my shit that day. So I will never, ever go back to a Boston Pizza or invest in them, but I will mention that they do pay a 6.6% dividend. And I'm not going to lie, I'm kind of glad that their stock price has declined since then. I think that was it was way before. This is way back when I was coaching basketball the first time. And that was 10 years ago, so that was a very long time ago. They did hit a double bottom during the pandemic, and then they have recovered. But I just wouldn't buy them because I dislike their business practices. Because even on the menu, I didn't read it that on the back of the menu, cheeseburgers don't come with cheese, which just again, I don't understand. She pointed it out to me. I wasn't happy. I wasn't taking that. I basically never gave her a tip. That's the end of the story. I ended up getting forced to pay for it, and I just gave her no tip. And I looked at her and I said, "The $5 cheese, that's your tip. Bye." And they have raised their dividends since the earlier on in the pandemic. However, at the same time, when we scroll down a little bit farther, they still haven't got back to what they were doing pre-pandemic. And then if we look at their total revenue breakdown per year, we can see that back in 2018, they have really not raised their revenue at all. And 2020 somehow is even worse. However, at the same time, it's a pandemic. Most people just eat in at Boston Pizza. They don't order out, so I can understand that. And I, again, will never order from Boston Pizza. A&W, one of my favorite fast food places. I despise McDonald's. However, A&W has usually some pretty good root beer. And AW-UN.to. If I was to buy one of these companies, I don't own any of them, by the way. This is the one I would buy, even though it only has a 4.6% dividend with 10,000 average shares. I just like A&W, and their chart isn't all that bad either. If we go over to their chart over 5 years, it pretty well, in my opinion, has traded sideways. If you could have got it at $25 a share, you are lucky. And it's currently at $40 a share, all-time, or at least a recent all-time high is $45. And it seems like they're pretty strong. But I, again, would say that they need to have some kind of an app, or at least a better app than what they have, to order from. Maybe give some rewards points, things like that. That is how the world is starting to move. Now, while they have raised their dividend, they've also lowered their dividend at the same time. So take that with a grain of salt. And their financials were lower in 2020, but that's no real big surprise, to be honest with you. They are not traditionally a takeout company. However, they do have drive-thrus, which that should be a heck of a lot higher because people were not allowed to be in restaurants in Canada for years, it seems like. So, because our government just apparently dislikes restaurants. And the keg, again, another one that is set up pretty good for the future. 7.7% dividend. I don't go to the keg because I'm cheap, but at 16,000 shares per day, it's not too bad. And of course, if you're cheap like me, you could just buy a few shares of the keg royalty income fund and use that dividend to buy a $50 or $45 or whatever cost burger that they have. See, I'm a pizza and burger guy. I like pizza, burgers, and beer. That's my thing. And when it comes to the keg, they have burgers, but they're like 30, 40, 50 bucks. And I'm not willing to pay that much for a burger. So if I'm going to pay that much, I might as well just cook it myself on the barbecue, make my own, and it's probably better. But at 7% dividend, I'll take the dividend, and I could use that towards taking a girl out for dinner. I'm single. Who wants to go out with me? However, their stock price has declined over the past couple of years before the pandemic, and I'm really not surprised that they just absolutely plummeted. It would have been nice to get them at $7 a share because they're at $14 now. However, I would really think that they'd be trading sideways until things start completely opening back up in Canada, which probably will be never. However, they have raised their dividends since the beginning of the pandemic. However, it's still not as high as it was pre-pandemic. And their earnings, of course, this is what we were expecting to be low. That's no surprise. Again, in Canada, we're not allowed to do anything. While in the States, you guys are having fun down there while we are stuck in our igloos up here in the cold. I hope that you've enjoyed today's video. I hope that you've enjoyed some of my banter and my jokes. I tried to be funny for this one, and I'll see you guys again next time. Let me know what you think down in the comment section below. Remember to do your own research and to never trust a random person on the internet. I'll see you guys again next time.